Hey everyone, welcome back to Corporate Decoder, the place where we unravel the confusing world of corporate finance and leave you with the real story behind the numbers. Today we're diving deep into Victory Capital Holdings Inc. latest annual report, Form 10K, and let me tell you, this filing read like a financial novel with a few plot twists and a huge acquisition. Stick around because we're going to break down what really matters, what is driving their growth, and where the potential risks might be hiding. Before we jump in, if you appreciate getting straight insights from these complex documents, make sure you are subscribed. We also have a growing community on Discord linked in the description below, where we discuss these filings and much more. Alright, let's get right into it. Victory Capital is a pretty big player when it comes to managing money for individuals and institutions. Think of them as the conductors of a huge orchestra of investments, managing billions upon billions of dollars across many different strategies and products. Now for the numbers, and wow, did their revenue see a jump in 2025 compared to 2024? Their total revenue shot up by a massive 46%. That is like going from selling 100 widgets to selling 146 widgets in a year. This means they brought in an extra $412 million. This is a huge leap and definitely tells us something significant happened to boost their top line so dramatically. The main reason for this revenue explosion is pretty clear when you look at their assets under management, or AM, in just 1 year. Their AM more than doubled, growing from $171.9 billion to a staggering $313.8 billion. This is the kind of growth most companies only dream of. It's a 82% increase. So basically, within a year, they increased the money they are managing by almost $142 billion. That's a lot of trust from their clients. And here is the big story behind that massive AUM growth. In April 2025, Victory Capital completed a strategic transaction to combine with Amundi's US operations, now known as Pioneer Investments. This single deal added a colossal $114.6 billion to their books. This is not just a small acquisition, it is a game changer that significantly boosted their scale and expanded their global reach. This acquisition is clearly the driving force behind their impressive financial performance in 2025. Now, while revenue and AUM soared, their expenses also saw a significant increase, particularly in personnel costs. Compensation and benefits jumped by a huge 67%. That is an extra $145.8 million spent on their people. This makes sense given the Amundi US acquisition, as they likely brought on a lot of new employees and had to integrate teams, often leading to retention bonuses and other compensation-related costs. And it's not just salaries. They also saw a big jump in acquisition-related costs, nearly tripling from $11.3 million in 2024 to $35.5 million in 2025. These are the costs associated with making deals happen, like legal fees and advisory services. The Amundi US transaction was clearly a costly endeavor, but likely one they believe will pay off in the long run. They also reported significant restructuring and integration costs of $29.7 million in 2025, another clear indicator of the effort involved in absorbing a large acquisition. When you buy a company, especially one as large as Amundi's US operations, you often end up with something called goodwill on your balance sheet. This is essentially the premium you pay over the fair value of the net assets acquired. In 2025, their goodwill almost doubled, jumping from $981.8 million to $1.2 billion. This massive increase in goodwill directly reflects the scale of the Pioneer Investments acquisition. Now, goodwill itself isn't something that generates cash, but it represents the value the company sees in the acquired business. Similarly, their intangible assets, which include things like management contracts and brand names, also saw a dramatic increase. They grew from $1.26 billion to over $2.4 billion. Again, this is largely due to the valuation of the Pioneer Investments business, recognizing the value of their existing client relationships and their well-established brands. This acquisition also had a huge impact on their equity. Total stockholders' equity more than doubled from $1.12 billion to $2.42 billion. A significant portion of this increase comes from the issuance of new shares, specifically common and preferred stock, to Amundi as part of the deal. This shows how they financed this massive acquisition, largely through stock, rather than just cash. On a more positive note for shareholders, Victory Capital continued its trend of increasing dividends. In 2025, they paid out $1.94 per S-share, a nice 24% increase from the previous year. This shows they are committed to returning value to their investors and are confident enough in their financial health to increase dividend payouts. Now let's look at some of the more complex financial gymnastics. They still have significant contingent consideration liabilities, essentially money they might owe to sellers from past acquisitions if certain performance targets are met. For the West End acquisition, they have an earn-out payment liability. In 2025, they paid out $63.7 million towards this. The total amount they estimate they might owe has decreased because they have made payments, but it is still a substantial sum. This shows that even after acquiring businesses, there are ongoing financial obligations tied to their future performance. What is interesting here is that for their new energy capital acquisition, the liability for contingent payments is now zero, meaning those targets were likely not met or the period has simply passed. Of course, with any business, especially one in the financial sector, there are always risks. Victory Capital highlights a lot of them. They are heavily reliant on their assets under management, so any drop in the market or client redemptions directly impacts their revenue. They are also exposed to the volatility of global markets and geopolitical events, which can always throw a wrench in investment performance. The loss of key investment professionals is another significant risk, as talented managers are crucial to their success. And like many companies today, cybersecurity threats are a major concern, with the potential to disrupt operations and cause serious reputational damage. Speaking of cybersecurity, they put a lot of emphasis on their program using frameworks and bringing in third-party experts to test their defenses. This is smart because a major breach could really hurt them. They acknowledge that while they have robust measures, no system is foolproof, and a sophisticated attack could still cause significant problems. So, what is the overall story here? Victory Capital has made a huge bet with the acquisition of Amundi's US operations, rebranding it as Pioneer Investments. This has dramatically increased their size, their and their revenue. They are clearly committed to a strategy of growth through acquisition, believing they can integrate these businesses effectively onto their platform. The diversification across asset classes, investment strategies, and client types is a real strength, providing some stability. However, this growth comes with significant challenges. The increased compensation and acquisition costs are substantial, and the increased goodwill and intangible assets carry their own risks if future performance doesn't justify these valuations. They are also heavily exposed to market fluctuations and the ongoing competition within the asset management industry, especially with the continued shift towards lower fee passive investment options. In my opinion, Victory Capital is making bold moves, and the Pioneer acquisition is a clear signal of their ambition. The success of this strategy will hinge on their ability to effectively integrate the acquired operations, retain key talent, and continue to generate strong investment performance across their diverse range of strategies. The sheer scale of the integration and the associated costs and risks cannot be understated. They've increased their revenue substantially, but also their expenses and liabilities. It is a high-stakes game, and the next few years will be critical in determining if this aggressive growth strategy pays off in the long term. What do you think about Victory Capital's acquisition and their financial results? Let us know your thoughts in the comments below. If you found this breakdown valuable, please hit that like button and subscribe for more deep dives into the financial world. And don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next one.